Hello, my good people. It's my hope that you are well and that the Lord has kept you safe this far. Welcome aboard. Welcome back to this space. As we continue getting to dive and learn more in the savings investment world, and this video is a bit different from the others because. I think of getting to discuss something that I don't think that I have discussed before. Something that is quite unpopular among many people, among many Kenyans. But I believe information is power. So it's good that we get the information, we get to learn, then decide what to do with the information. And my topic of interest this minute, and in maybe some other few subsequent videos, is insurance. It is a field that is yet to be accepted, or it's yet to be well understood by the Kenyan population, because right now if you check the insurance penetration rate in the Kenyan market is about maybe 3%, of which that is a combination of both the general insurance and life insurance. And you'll find that majority of the insurance policy holders are the motor vehicle holders. And I can promise you that the reason as to why motor vehicle insurance is the most popular type of insurance is that it is compulsory. There is an insurance act that dictates that you cannot drive a car on the Kenyan roads without at least a third party insurance. That's a compulsory regulation. So that's why everyone needs to have a third party insurance policy. Otherwise, kama haingekuwa hivyo, hata magari mingi hazingekuwa na insurance. And Kenyans are always Kenyans. They would take the risk of doing away with insurance. But now the government have made it compulsory. So you find that many people have third-party insurance policies because basically it is compulsory. But now I don't intend to discuss general insurance in this platform. For a better understanding, insurance is broadly categorized into two. We have the general insurance and we have the life insurance, which is normally termed as life assurance. But because in this channel we tend to discuss things in a layman's language, I will just use the term life insurance, not just to try not to create confusion now, because when I start talking about assurance, you might start wondering what is this that we are assuring. But we don't say life insurance, instead we say life assurance. So whenever I mention life assurance, it is the same thing as life insurance. So I don't intend to talk about general insurance. My aspect is, my interest is on the part of life assurance or life insurance, simply because it is the one that falls more into the element of savings and investing. We'll come to discuss this later, but to mention is that general insurance policies are policies of indemnity. What we mean by indemnity is that that policy is meant to take you back to the financial position that you are before the occurrence of a loss. So let's say I had a building and I have insured my building against fire. The building gets burnt. the insurance will not come and build me two buildings. They'll just come and reinstate me back to the state I was before my building got burnt down. So they'll just come and get me another building. Okay, in such a scenario you will benefit because maybe ile building ilichomeka ilikuwa mzee na hawezi kuja kukujengea building mzee, hapo uta benefit kidogo, but in real sense, practically, general insurance policies are policies of indemnity, meaning that their aim is to take you back to the financial position that you are before a loss occurred. They are not meant to benefit you in any way. But when it comes to life insurance policies, they are a bit different. They are not policies of indemnity. They are not meant to take you back to where you are before a loss occurred. Some of them you will get to find that the thing of interest in that insurance policy is your death. So having that policy does not mean that they'll take you back to the position where you are before the loss occurred, because they cannot take you back to life. But so it is a bit different how the general insurance and life insurance operate. There are some policies that cut across the two types of insurance, but there are some key features that make life insurance special. And it is important to note that for you to benefit from a life insurance policy, there is no loss that should occur for you to benefit. There are some policies that you don't need to get a loss in for you to be able to benefit. For general insurance policies, a loss must occur for you to claim. For you to claim with your insurance company, a loss must occur. But for the life insurance policies, si lazima kukuwe na loss imefanyika do claim. There are some policies that are just savings policies that they get to some maturity time when you are okay, so you need to just claim your benefits back. So in general, you can say that life insurance policies are not meant to cater for risk as those in general insurance. But even if you don't have losses that will get to you, even if you don't have misfortunes that will find you, even if you don't have calamities that will strike, you can still have a life insurance policies, because there are some problems that each and every human being is likely to tackle, is likely to face. One of the things that majority of us human beings will face is the challenge of maybe having a home, the challenge of educating your children, the challenge of having financial freedom at old age. And those are some of the challenges that these life insurance products come to feel. It is some of the challenges that the products come to offer solutions to. And to begin with, you can just check on some of the importance or scenarios or uses or benefits of some of these insurance policies. And one of them is security. Majority of us are concerned by the well-being of our dependents. And basically, when I say dependents, is that those people who get to depend on you. You are the breadwinner of the family. You are the one who provides shelter, food, school fees. You can use a life insurance policies as a form of security that when then if the unexpected gets to happen, some of the desires that you had with your family will still get accomplished. These policies assist you to get some peace of mind, because you have some guarantee that that those that you have left behind, maybe you'll leave them something that they can use to establish their lives again. Even if you pass away today, at least even if you had children in school, you can be assured that they'll get next term's school fees before whoever that will take charge after you gets to establish themselves. That is the kind of mind that we are talking about, the peace of mind that we are talking about. Then the other thing is elimination of dependency. Dependency simply means relying on someone else. You might get to rely too much on your family members, on your friends, if things go bad. But when you have a policy somewhere, let's say a policy that is tailored to pay a given sum of amount, in case you get permanently disabled, when such thing strikes, you will be covered against getting to depend totally on someone else. So that is the kind of dependency we say that some of these policies get to eliminate. The other thing is that it encourages savings, and I think this is where some people have gone wrong with these policies. When it comes to premium payments, because you need to pay premiums as you had agreed in your policy as it is dictated in your policy document. And definitely we get to discuss this, but if you don't pay premiums, your policy will get to lapse. So it is a policy that can force you to save, because definitely you get to understand the repercussion of not paying your premiums on time. That is maybe the monthly or quarterly or yearly contributions. You understand the impact of not paying them on time. So you will always try and ensure that you pay them on time. Otherwise, kitakuramba. So it encourages savings. Like you are forced to save on a gunpoint. Not really a gunpoint, but you'll have something that will force you to put something aside for the rainy day or the unseen days. It is also a profitable investment, because you will find that majority of these life insurance policies gets to offer interest on your contributions, and you are paid those interest in form of bonuses. So it is also a viable means of investment, and that's why I believe that I'm still in my scope of the topics that I focus on, because it is a form of investment. So those are some of the benefits that you get to gain from insurance policies. This is just an introduction. You get to learn more. So keep checking on the subsequent videos, and maybe you'll be able to learn a thing or two. And to make it clear is that in this insurance field, it is good to declare any conflict or any interest that one might be having. So it is good to say that from the beginning is that I'm not an insurance agent. I don't work for any insurance company. So I'm not here to get business. I'm just here to give information. Then with the information that you get, then you can decide what to do. So I have no conflict of interest as I discuss this. So I am free to discuss the good, the bad, and the ugly side of the topic. So keep hanging on, get checking, and we get to learn. So every day is a learning day. we try and get as much as we try and we try to learn as much as we can, so that when we get to make decisions, we'll make decisions that are backed up by some information. Information is so crucial when it comes to decision making. So we have a lot to discuss about life insurance and life insurance products. So hang on and see you in the next video. Thank you.